Chris Tessin, Managing Partner and CIO at Acuitas Investments. Your firm believes that it is worthwhile for investors to diversify into small cap and micro cap equities. What is the philosophy behind that approach, and how does Acuitas incorporate it into its own strategies?
Sure. Thank you. Acuitas was founded with a focus on the less efficient asset classes. So really small and microcap, in our view, is kind of the purest example of that. It was the background of the folks at the firm. We have sort of a heritage from worked at Russell Investments, a number of us, both me and my business partner, who are all founders of the firm. And we were really looking at the market and saying, the most pure example of multi-manager, the way it can create a true efficiency for the end clients is down in the small and microcap space. So the least efficient areas of the market where you need to spend time vetting managers, doing a lot of fundamental research on managers. We're a multi-manager firm, so that means that basically, our primary job is to vet investment managers, spend a lot of time fundamentally looking at their process and philosophy and finding the great ones, and then putting them together in portfolios for generally institutional clients. And also over time, we've been able to repackage those and offer them in a retail format. So that was really kind of the genesis of the firm. Now, what it means day to day is we're interviewing investment managers. We're looking far and wide. We've become one of the largest allocators in the world to microcap managers. And also have an expertise in small cap, which we've been doing for over 20 years. So our investment team evaluates investment managers, looks at who we think has ability to generate alpha or excess return over the index over time. And then we put them on our buy list and put them together in portfolios for clients. So the end client actually gets, like I said, an efficiency, a single line item where they just have small cap or micro cap, but they're able to, just not have to spend that time going out broadly in the market and evaluating. There are 600 plus small cap managers in the U.S. For U.S. small cap alone. That's a big time suck. And there's the issue of capacity. So capacity is really important for us. We kind of consider ourselves capacity junkies. And what that really means is we look at every individual manager and how much we think they can manage. We come up with our own estimates. Because if you allocate to a great small cap manager, chances are they fill up with assets. And when they fill up with assets impact performance. So you need to be on the early end of that. So we've been really aggressive at sourcing and seeding managers, even being the first institutional allocator for the majority of the microcap managers, just as an example. Over 90% of the strategies we've allocated to, we've been the first institutional allocator to the strategy. So not new firms, we get lots of calls from people with a Bloomberg and a dog in a garage, but but more likely institutional firms with 20 plus years of experience who might be buying down in capitalization, and that is the portion that we want. So we'll carve off a product and we'll be interested in seeding it. So we're very interested in talking to managers in their early days, emerging managers, and also kind of emerging products, if you will.
Now, can you tell us about Acuitas as a firm more broadly, including its full range of products and services?
Sure. There are four primary products at Acuitas. We manage U.S. microcap, which is sort of our flagship and a large portion of our assets. U.S. small cap as well, which we've done, as I mentioned, for decades. We also manage international small cap and emerging markets small cap, which are both really robust areas ripe for active management. And when I talk about active management, we're in areas of the market where it really pays to be active, where it pays to allocate to investment managers that are looking to beat an index. The indexes are inefficient. They hold a lot of non-earners. They hold a lot of what we call junk in some ways that many of the active managers, some of the things that are actually kind of leading this summer or this year in the market that are, trading despite having no revenue, no earnings, et cetera. Active managers are sifting through companies, seeing through who's going to be able to generate those future earnings. Is it a proper multiple for that company? Do they think that they can either grow their earnings, expand their multiple, just increase the stock price in some ways for clients? And we think that our background evaluating these managers is key to generating excess return for the end clients. So we do it both in the US and non-US. But really, our purview, if you just take a step back, is small and micro cap globally. We're the only multi-manager that has this sort of narrow focus, and we think it's a real advantage for us at the firm.
Chris, thank you very much for your time.
You're welcome. Thank you.